Hey everybody, I'm Tracy. And so last month, uh, an insider at Coinbase was charged with insider trading. And insider trading is usually reserved for the securities world. But what made this indictment unique was the fact that the crypto that this was an individual who had something to do with the listing process on Coinbase. Those cryptocurrencies weren't necessarily securities. And the government effectively made the case that since these individuals were trading on material non-public information, it didn't necessarily matter that the underlying predicate was a security. And that's really a big step. And I think it's something to be wary of, right? Because you can be an insider at a project and know that something big is going to happen, not just like a listing, right? Some kind of development. And that could be insider trading, just like if I were the head of a gold company and I was going to announce that we found gold at some mine and I went and purchased a bunch of stock. That's insider trading. Well, so anything like material, right, that's not public could, in theory, bring about insider trading charges, right? And that's what this indictment is effectively saying, irrespective of whether or not crypto is a security, right? Whether they were security tokens. And if you know anything about like the major exchanges like Coinbase, they go to great lengths to make sure that they don't, as I've spoken here quite a few times about, that they don't list security tokens, because if they do, then Coinbase would be acting as a unlicensed national securities exchange, right? It doesn't have the ability to make a market or facilitate a market for security tokens. No exchanges do, right? Unless you're an ATS or a national securities exchange. So your major ones, Binance, Coinbase, etc., they can't trade security tokens. And like I've said before, like the biggest part of getting listed on a crypto exchange is an opinion letter from an attorney that says this token is not a security for these reasons, right? So this indictment really like extends sort of the realm of potential pitfalls for like project promoters and insiders, because it's not just like the listing, it's also just any material non-public information. And you could like argue and, semantics, as I'm sure they will in this case, and say, well, it's not a securities and there's no specific like crypto insider trading law, which there isn't. Or you could say that it's a commodity, which, the SEC and CFTC have admitted, like Bitcoin and Ethereum aren't commodities, but those are largely decentralized, right? So the question becomes, do you make the argument that these were securities, or do you make the argument that these were not securities, what have you? But I think the safe play is if you're sitting on like material information, whether it be a listing, a partnership, development, like, anything. I think in this environment, you have to be very wary about your trading activity, whether it's buying or selling, good news or bad news. Because remember, even buying in advance of good news, right, which seemingly wouldn't harm anybody, does in a sense, because you're taking them out of the market and then you're benefiting from the fact that the price is going to ostensibly go higher once that news is made publicly available. So for an insider, you have to be very cautious about what your trading is, right? And there's all sorts of rules that this kind of opens Pandora's box about, in terms of like insiders and like when they can trade and how much they can trade. Because like if you're an insider at a publicly traded company, there's limitations, right? There's windows like when you can trade, and there's limitations to how much you can trade. And you get into this whole 10b5 plan scenario, which really doesn't apply very well to crypto. But in the absence of clear guidance, then I think you have to look at it and go, okay, what's really going on, right? Like, what can I do? What can't I do? But one way to avoid a lot of this is for the projects itself to be very transparent. This begs for transparency, right? Like, to the extent that you're running a project and you're making like press releases or even like Twitter announcements, whatever, social media type stuff, then you never really have that issue where there's material non-public information upon which you could trade, right? So it's almost like begging people to say, this is what's going on, and like making these representations and staying and keeping the project like alive in the sense of, informing the public and keeping them aware and apprised of what's going on. Because if you do that, then there's really never a window where there is material non-public information. I mean, there may be obviously, but you're limiting those times where you're sitting on material non-public information, good and bad, right? So it's really, it's such a gray area, right? Like everything is. And I feel like I get on these chats here and I say it's a gray area. Well, it always is, right? It always is. And I think we'll see how it plays out in court, but this is definitely something that I think a lot of people are really going to get tripped up on if they're not careful, right? So, and again, we'll see, but, securities insider trading, serious deal, and I know a lot of people do it in the fashion that, this indictment was brought, but I think now's the time to sort of pare that back, focus on disclosure, and, go along with what generally would be securities law, even though it may not technically apply. So if you have questions, definitely hit me up, Adam@adamtracy.io, and I will chat with you soon. Cheers.